Hello guys, and welcome back to my YouTube channel. So in case you've been living under a rock or you don't like economics, you might have known that Turkey is apparently collapsing, or at least their currency is. So the government is sort of stable at the moment, but the economy is not doing that well. They're suffering massive amounts of inflation at the moment. And today, this video is mainly going to touch on business, politics, and economics, because I feel that for someone to be a good investor, they shouldn't just know about business, but they should also know about politics and economics in general. So I'll just give a quick summary of two of the YouTube videos that I've watched, which talk about the political or economic side of it. Then I'll give my own opinion as to what I think about the business side of it, which they didn't really cover. So essentially, the first video I watched was Turkey's Unraveling Economy by Patrick Boyle, and he does a very good job of explaining how the Turkish government has been doing. And the problem is that the president is attempting this experiment, basically, to summarize. And this experiment is similar to what China did in the 80s, either the 80s or the 90s with the yuan, by artificially deflating it or inflating it. I'm not sure which way is which, but I think by artificially deflating it, he was able to make exports cheaper, thus more people were going to buy Chinese goods. So they want to attempt to do the same thing in Turkey, in which case they mean they want more people outside of Turkey to be able to purchase their goods. The only problem with this strategy is that Turkey also heavily relies on imports, so the imports are becoming more expensive, and the revenue that they're gaining isn't being directed towards any specific industries that would help the country grow. The country also currently has a bubble, a real estate bubble, where a lot of houses are unoccupied. And this second video is talking about how the stocks have tanked. You can watch it, but just knowing that the stocks have tanked is enough for the explanation I'm going to give. So essentially, what I was trying to say is that if any of you are familiar with real estate or investing, during the bust or the downturn of the market, that is when you're supposed to invest the most, right? So since the inflation is high, the stocks are tanking, and the economy is not doing well, now is literally the best time in Turkey to either buy a house or invest by buying some ETFs, right? So most of us can't afford to actually buy a house like with 1 week's notice. You're like, oh wow, he said buy a house. I'll just hop on a plane for $2,000, fly there, look around for a house and get a mortgage to buy it. Not many of us can do that. But what a lot of us can do is actually invest in ETFs. So what are ETFs? To understand what ETFs are, you have to understand what mutual funds are. And to understand, after that, you need to understand what index funds are. But the long story short is that if you understand index funds, which is basically you have the stock market, right? Like the S&P 500, so the top performing stocks. And an index fund basically allows you to own a fraction of all of those stocks. So instead of you investing, like if you had $1,000 and you invest like $100 in 10 specific stocks, you can just invest $1,000 into owning a fraction of maybe the top 500 companies, right? And index funds and ETFs are pretty much the same thing. The only difference is index funds can only be traded once a day on the stock market, and ETFs can be traded anytime during the day. But the only issue is that because they can be traded anytime during the day, there's a higher fees for them. Personally, I am a bigger fan of index funds, but I've checked and I haven't really seen many ETFs for Turkey. I mean, many index funds for Turkey. And I think ETFs might be a bit more common than index funds. Don't quote me on that. But for example, Cathie Wood, if you've not heard of Cathie Wood, again, you live under a rock, but she's said to be the next Warren Buffett because she really invests heavily in new technologies. I mean, we're all hoping she's not another con person like Elizabeth Holmes. But anyway, she has a company named ARK Invest, and she also doesn't have index funds. She only has ETFs. I would also buy her ETFs. But basically, here's what people need to understand, that stocks are pretty much like real estate, right? If they go down, if there's a crash, they are going to come back. And what you might be saying is, well, look at Nokia or BlackBerry, those crashed and they never reached the peak of what they used to be, which is true, which is why you invest in an index fund or an ETF, because an index fund or an ETF is basically saying that the whole, like the top, maybe top 50, top 100, top 500, depending on the ETF or index fund, saying that the whole thing is going to crash and never come back. If you don't invest in it, that's what you're saying. But obviously, we know that it's not possible for the entire top 50 companies to crash and never bounce back. So that's why I'm highly suggesting investing in ETFs. And there's one specific ETF that I want to talk about. So this is the HSBC MSCI Turkey UCITS ETF. Very long name, very long name. Currently it's trading for 127 British pounds, I believe. Pounds or pence, I'm not sure, but I assume it's pounds. And if you just look at this graph, right? 1 minute. If we just look at this graph and we start at about April 2013, you can see that it was trading for $450, Great British pounds. It dropped, it dipped, and 2014, I think something happened in Turkey, so it dipped to $50, but then it climbed up, kept climbing. You're seeing it at 360 right here, right? Then dipping to 300. And then January 2015, it sort of dipped to 240. January 2016, it's at 240. It goes back up, back up. But if you keep track of the figures, as you can see, basically since 2015, it's never dipped below 240, right? It's going up to 300, up to 340, but it's not dipping below 240. But recently, right? Recently, you can see here, like it dips to 150 in 2019. It goes back up to 200, dips again to 140 in 2020, maybe the start of the pandemic. It dips to 120, and then it starts to come back up again, right? So in other words, what I'm saying is this ETF basically rarely dipped below, let's say, 200 for the most part. It's only during certain periods, like maybe the coronavirus pandemic, that it really dipped. But it was averaging more of 200, so to speak. And now it's going for a price of 127. So I think now, while the economy is crashing, which is why I recommended that second video on stocks tanking, because basically, if stocks are tanking, obviously the ETF has to become cheaper, right? That's just common sense. So in other words, I think this is a real opportunity to invest, because it's at a fairly low price. Maybe around 2014. I mean, you can check out the website for yourself. It's the Financial Times. You can just Google the ETF as well as the graph history, price history, and you'll find it on Financial Times. It has dipped below to these levels, but very rarely. And in fact, that should give you more incentive to buy, because you know that this is around the price where it dips and starts to pick up. But because things are really bad this time, it's most likely going to dip a bit further before going back up. So what I would recommend is paying attention to the news and paying attention to the ETF, and just monitoring it, maybe daily, every 3 days, to see how low it goes. Then the minute you see it going back up, that's when you buy, right? You buy just as it starts to exit the dip. And, if we're doing the maths, the difference between 100 and 200 and 340, you have the chance to maybe double or triple your money, right? So, in the broader sense of things, in terms of knowledge of politics and economics, I think it's good for a businessman or investor to generally know about these things beyond just business. So, knowing certain things about the economy, like for example, Spain, Italy, and Japan have been teetering on the edge of financial collapse. If anything, it's kind of shocking that it happened to Lebanon and Turkey first, though I guess maybe people are more paying attention to the advanced or fully developed economies, in the sense that out of the OECD countries, those would be the ones to collapse. But having that general knowledge does help you make better business decisions. So, one last thing I want to mention about the ETFs. I said, yeah, you could double or triple your money. So, yeah, definitely invest in it. But in terms of other investments, the knowledge about politics and economics is crucial, because let's say you're a businessman and you want to start a company, and you're thinking of where you want to position your Asian headquarters. You might be thinking, oh, why not Hong Kong? They speak English, and it's like one of the three financial centers of the world, financial hubs, the other being London and New York. So you're like, yeah, I'll go ahead. But if you're more knowledgeable about politics, you know that there's been a lot of tension between China and Hong Kong. So you might have started your company in Hong Kong, and all of a sudden you're like, oh shit, there are riots and the Chinese police trying to retake the island of Hong Kong, right? The the same applies to Taiwan, right? People were like, yeah, Taiwan, amazing. I think they make HTC. But if you are paying attention to politics, there's been extreme aggression in regards to China wanting to take back Taiwan. Some say that could even start World War III. I pictured World War III being more about China fighting with India, but now people are saying it might be with Taiwan. So having this general knowledge of politics and economics does help you understand business better. So, for example, with the economy, right, you have the OECD countries. I don't even know what that stands for off head, but think of all the developed countries. So Canada, Australia, the US, and Western Europe, right? And then you have BRICS. So BRICS are the quote unquote emerging markets or newly industrialized markets, or basically the tier below the OECD countries. So that's Brazil, Russia, India, China, and South Africa. So a lot of you would have heard of BRICS before, but what many of you might not have heard of are the next 11. So here are the next 11 countries. Bangladesh, Egypt, Indonesia, Iran, Mexico, Nigeria, Pakistan, Philippines, South Korea, Turkey, and Vietnam. So these will become some of the largest economies in the 21st century. I had actually forgot that Turkey was there because I don't know them offhand. But basically, you see, having this knowledge, right? Having this knowledge from politics and economics, it leads you to make better business decisions because you have ETFs for emerging markets, but they're seen as being very risky. So those are like index funds, like, the top 50, top 100, top whatever stocks in the emerging markets. But people are like, oh, they're very bearish when it comes to emerging market stocks because they're like, oh, these countries will go to hell, the governments are not stable. But really, if you understood economics, you'd understand these countries are the future. I think at one point, Nigeria is going to be the third most populous country in the world. Uh, yeah, so basically, a lot of people have heard of uh, BRICS, but they've not heard of Next 11. So my eye would also be paying attention to the Next 11, not just BRICS. So I'm actually pretty shocked that Kenya isn't amongst the Next 11. I think they should be because they have a very diversified income. I mean, yeah, economy, very diverse economy, as well as, I think, very high GDP growth rate when it comes to East Africa, like it's the hub of East Africa. But anyway, the point is, for example, someone might be an investor and they might think, oh, let me invest in the Japanese stock market, which is like either the third or fourth largest economy. But if they don't understand politics, they may not realize that Japan had the lost decades where there wasn't really any economic growth, and that's because majority of the companies in Japan were formed like 50 years ago. The government is too friendly with the big corporations that existed, so they haven't really supported startups. Um, so I'm not fully in support of Democrats, but if they don't break up Google or Facebook, then it might become a bit difficult for new social media platforms to emerge. I'm not saying they should. I'm just saying if you study Japan's economy, you might understand that that reasoning is not too far-fetched. And yeah, again, Italy and Spain are not too hot at the moment, as well as most people not realizing that Germany is the powerhouse of Europe. I mean, if you're in Europe, you'd understand that, but outside of Europe, most people are like, yeah, I think it's Britain that has the best economy, but it's actually Germany, and I think maybe it's even France that's second, and then it's Britain, depending on what year. But yeah, those are just my tips on how politics can affect business decisions. And that's why I think it's good to study all three, and it really helps you broaden your horizon. Because the thing with genius, for example, like with people who excel at things, it's not just that they're passionate about it, it's also that they study things for a long period of time. Like, maybe someone who's a programmer, if they start coding at age 9, by the time they're 21 or 23, they make a very amazing app, but you see they've been coding for over 10 years, right? So the people who are best in their fields, it's not necessarily that they have the highest IQ, but it's also because they've been in that field for quite some time. I mean, it doesn't always apply, but I'm trying to say that you get certain insights that you wouldn't normally get by just sticking to one field. So what I'm trying to say is that if you look at business alone, then you might miss a few things about politics or economics. So politics and economics should be studied for their own sake, like just out of interest, like, oh, what's happening in Greece, what's happening in South America, what's happening in Africa, what's happening in Canada, right? I would actually invest in Venezuela, by the way. I would buy like some core essential elements of the economy, maybe like some warehouses, some farms, right? Now would be a really good time to buy some Venezuelan farmland. I don't know if Venezuela will bounce back though. That's a bit tricky. That's very, 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 very tricky. But I would, if I had some money, like if I was worth like 30 million or something, I'd probably invest 500,000 in Venezuela because, at some point it's got to bounce back. It has to, has to. Though I'm not too sure, like definitely my confidence in investing in Turkey or maybe even Greece is much higher than investing in Venezuela. But as I said, stocks are like real estate. You invest in the downturn, in the bust cycle of the economy, and the economy has boom and bust cycles every 10 years. But the fact that it's cyclic in nature is what's important because it shows you that it also applies to countries in general. I mean, some regimes may not recover, like Zimbabwe didn't really recover, and North Korea didn't really recover. But that's like what, two countries out of what, 195 or almost 200 countries. So yeah, what do you think of the Turkish president's economic policy? I would like you guys to leave it in the comments below. Like, do you think it was a smart thing to do? Do you think mimicking China would lead to success? Or do you think he should raise the interest rates to lower inflation? But if you paid attention to the video, this other, I mean the other video by Patrick, you'd realize that he said this is one of the easiest crises to fix because it's just a matter of economic policy. Like, just raise the interest rates and everything will go back to normal, which is why I highly suggest get those ETFs and double or triple your money. It's 127 Great British pounds now. So let's look at this video in 2 years and see if I'm right. Yeah, in 2 years. So it's 2022 now. Let's look at this video in 2024 and see if investing in the ETF was a smart idea. I hope it was. If it wasn't, then hopefully I'll have learned more about investing by then. And it's all about leverage. Like, if you buy one stock or one ETF, then you're only gonna make $200 or 200 pounds. But if you invested a lot, like if you invested 10,000 pounds, you could make 20,000 pounds. I'm not saying you have to invest a lot. All I'm just saying is the stock market doesn't really average extremely high returns very often. It's just people leverage their money, right? They really, really leverage it, right? So what I'm trying to say is someone might invest 100,000 and they make 1 million, right? So obviously, if you invest just $100, you make 1,000 might not mean a lot. But if you got your hands on 100,000 and you made 1 million, that would be a lot, especially when you consider there's no like employment or starting up a company or corporations or complications. Yeah. I think maybe next time I'll also make a video on the new guy who's said to be the successor to Warren Buffett in Berkshire Hathaway. I don't really have a full opinion on him yet, but I think if you invested now, okay, they say the economy is gonna crash this year, But if it wasn't for the economy crashing, now would be a good time to invest in Cathy Wood, because I think Berkshire Hathaway stock will drop. It definitely, I mean, definitely 100%. Like a new manager, investors are usually very bearish when it comes to change, where especially when there's a new manager that's not the founder. So that's Cathy Wood's time to shine when Warren and Munger are gone. If you don't know who Charlie Munger is, again, you either live under a rock or you don't care about economics or investing. Yeah, that's it for now. And don't forget to leave your comments.